Hey everyone, it's Catherine Allen at Allen Realty Group here, bringing you another buyer episode. I'm going to be doing a couple more episodes of buyer tips and tricks before I jump into seller ones. So stick with it. If you are thinking about selling your house and you want some information sooner than later, you can expedite this process by calling me at 207-200-1670. And again, I'm with Allen Realty Group here at Keller Williams Coastal Realty in Maine and New Hampshire. Episode 4, buyer tips. Last week we spoke about why getting your lending in order with your lender, your pre-approval, your pre-qualification, why that's important to your home shopping experience. You need to start first with your funding because your funding is going to tell us exactly what we can buy and at what price we can buy it. Most people jump to the conclusion that, listen, my pre-approval is only for the purpose of figuring out how much money I can spend, and I use an online calculator which told me at $1,800 a month I can afford a mortgage of $240,000. In theory, yes, your online calculator is going to give you a ballpark idea of your budget, but you have to keep in mind all they're looking at is approximately how much money you owe to debts and how much money you have incoming. So it's only a portion of your debt to income. You also have to keep in mind that they're not pulling your credit, and your credit score is hugely important. A lot of loan programs are very credit sensitive, such as conventional. When you hear about conventional loans, a lot of times people think, hey, my parents used a conventional loan to buy their house. It was 20% down. I don't have 20% down, so I can't go conventional. That's actually not true. Conventional has programs as low as 5%. So there are options out there, and by speaking with your lender, they're going to tell you what your options are depending on your credit score. For people that are very well qualified, if you've got a very high credit score, you can really have the pick of the litter when it comes to loan types. But if you're newer, you don't have a great credit history, or you don't have a lot of credit history, there's programs such as the FHA program, the first time home buyer program, which allows you to buy a house for as little as 3.5% down. The reason we've got to get that pre-approval and the reason you've got to share that with your realtor is there's a lot of critical information in that pre-approval letter that we need to know so we know how to tailor your search. So for example, when I get your pre-approval letter, it's going to tell me a couple of things. It's going to tell me how much money you're approved for, at what tax rate. So let's say I have a $300,000 pre-approval with a $5,000 a year tax rate. That's going to tell me that if I go down in taxes, like if we find you a house that's maybe got $3,500 a year in taxes, that I have maybe another $15,000 or so that we can add to our home shopping budget. Taxes will have a huge swing in your mortgage budget. We want to see those numbers so I can tailor results and I can really let you know before we go see a property if the financials can potentially work for you. Additionally, what I need to know is what type of pre-approval do you have? I need to know that loan type because if you're FHA, your USDA, your VA, these are all federally backed programs, and as a result, they have a little bit more stringent rules around the condition of the home. So at the end of the day, these government programs are looking to make sure that their clients are getting into safe properties. So their primary concern is health and safety, and the items they most often look for are handrails. Is there a set of stairs that's more than 36 inches tall, and does it have 3 or more steps? Does it have a railing on it? They're looking, I don't have railings on my property, but that's something that appraisals will look for. So we've got to begin with the end in mind. We need to know, hey, will this property have an issue when we get into week 5, when the appraisal is done, where we need to make sure that this railing is addressed before we get to that point. Who's going to pay for it? Who's going to do the installation? These are things I want to be looking for when we're touring homes so we know what to expect. Other things these government programs look for, some require us to test the water and make sure the water quality is a certain standard. All of them require no peeling paint. Peeling paint, not really a big deal. That's something that we can fix on our own, but it is a big deal to these federal programs, which is why, again, we need to know what type of loan we're dealing with. Conventional is a little more flexible. Basically, that's why we need to know what your loan type is. Furthermore, let's say you want to buy a property that needs a lot of work. Maybe the floors need to be refinished. Maybe it's something more serious, like you need new windows. Maybe the peeling paint is so bad you've got to replace all the siding, but you really want this house because it's under budget. We can actually make that work. And the way we do that is by tagging on an additional loan product called a 203k or a renovation loan. What that does is it basically piggybacks on your existing loan. Makes it a little more complex, and I can definitely make another video on a 203k/rehab loan if that's something you guys would like to learn about. If so, drop me a comment down below. Let me know. It's an in-depth process, but I think the regulations tend to make people more nervous. And if you're with a realtor who's done a 203k, that would be me, it's not really that scary. It's a great program, especially right now in our current market. The 203k can be a great option, especially in markets like this. Right now it is March 2021. We are coming out of a pandemic and national inventory is down 40 to 60%, which means the good houses are moving fast and the less than ideal properties tend to be sitting on the market. So there is opportunity in properties that need work. Perhaps it's an estate sale where grandma's lived in there for 50, 60 years. The house is a time capsule, needs a lot of cosmetic updates, needs new flooring, needs new windows, maybe needs a new roof. These are things that we can use a 203k for. Additionally, if you want to go nuts, there actually is a bigger 203k. A 203k streamline lets you do cosmetic stuff. If you're getting into structural, such as moving walls, adding on additions, you can use a 203k for that. It's a full 203k, a little more complex process. I can make a separate video about the renovation loans because they are a whole other animal. In summary, why I need your pre-approval as a realtor is because it's going to tell me what your shopping budget is, what the tax threshold is, so I know how that impacts your budget, what type of loan you're using, so I know what types of properties are automatically off the books due to condition, or what we need to know when we view these properties that needs to be addressed prior to putting in an offer to ensure that we get you to the closing table without any hiccups during the appraisal process. So that's buyer tip video number 4. If you have any questions, you can always call, text me at 207-200-1670, or my email is Catherine@allenrealtygroup.co. Hang around for the end of this video. All my contact information will be there. Don't forget to like and subscribe to our videos so you get alerts when we release new ones. See you soon. Bye.
May 2021. Sorry, it's March 2020. I'm time traveling in 2022. Jesus, what year is it?